Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is your weekend edition of the financial markets for the 1st of November, 2019, and we're about 3:20 in the afternoon. This will be the settlement prices in the stock indices. Yes, they're going to resume trading at 3:30 p.m. and go to 4 p.m., but it won't matter. The settlement price is determined at 3:15. Not so in the metals. So while I'm doing this at about 3:20, you're going to be a bit lower than this in the gold on the settlement and the silver. I already saw where they settled, and that comes in at 12:30 p.m. Central Daylight Time. Dollar index down a little bit, but we gave back a bit of the gain in the yen. We gave back a bit of yesterday's gains in the bonds and the notes, and the energies picked up rather sharply. Now, we did see the rig counts. They keep falling. So we're going to have less supply ultimately as those rig counts keep coming down, and I'll be writing about that this weekend in my newsletter for those of you that subscribe to my full package of research. So let's talk about today, because we had employment numbers, and that was the first thing that set the market off. Very strong numbers. You could see the Fed was right in what they did by saying this might have been it for the insurance cuts on Wednesday. Then we heard out of Wilbur Ross and we heard out of Steve Mnuchin that the trade deal is going well. Actually, it wasn't Mr. Mnuchin, it was Mr. Kudlow. Then we heard from Mr. Lighthizer and Mr. Mnuchin in conferences that, yes, the talks are going well, but we've heard that. What I think kicked the market up was when the Chinese said through their consul that, yes, in principle, they've agreed on many things. It appears what's not resolved to be for phase two, which is the intellectual property, the ownership, forced transfers of it, things of that nature. But agriculture seems to be done. The currency problem seems to be addressed. What this all means, the devil's always in the detail. We'll get that when they tell us. They haven't told us yet. When you come to the charts on the weekly edition, the first thing I'm going to do is a monthly chart, and then every chart after that's going to be weekly as I'm looking at the bigger picture. Now, as we come to this chart, you can see this market has just spent most of this year over the 18-month moving average of closes. On a seasonal basis, the strongest part of the year is coming at you. November's typically good, and December. And I remember we had breaks, as you know, last year, and then we had to come back at Christmas for that rally. This year, what's different is you might have that trade deal in front of you, and that could be very positive news. The negative, we have impeachment proceedings coming, and my guess is they're going to try to get this out of the House as fast as they can to the Senate and do with it what they may. But the market in the stock indices looking strong there. On the weekly chart, this is going to be the strongest close you've ever had. 30.63 and a quarter, all-time record on this weekly close. Let's applaud it. That's a lot that's on this. And this market's just recently come from the 28.55 level, if you can see that. So this has been one heck of a rally, almost 200 points. You're breaking out to the top side, as you can see. If you take a look at swing lines, you've got a pattern of higher lows. You had higher highs. You've extended it now. Bullish. You'd have to get back under that 28.55 level on this chart to break that pattern of higher lows, higher highs. When you take a look at where the key moving averages are, you have the 200-week moving average down here, the 100-week, the 18-week. When the market is over the 100-week, I say the bias is up. When it's under it, the bias is down. I next look on this chart for where the Bollinger Bands are. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the chart. And I get questions from people. They'll say, well, does it work the same way on a weekly as a daily? I'll let you tell me. I'm pretty sure they do. No difference. So the first resistance zone, 30.72, right above us. We haven't hit an upper Bollinger Band in a very long time. You'd have to go back. I don't even know if you hit it here in June. You got right up to it. I remember that. I'm not sure you hit it. You hit it on the downside, but now you're ready to hit the upside. Generally speaking, the first time you hit a band, be it an upper band, down band, it's has a sense of stalling the market out as some pros take money off at those numbers. Now, that is not a reversal. It doesn't mean that you hit the band and you're going short, or you hit it and you're buying. I realize that sometimes it looks like that, but you must understand the idea here is that's where the pros come out, and where the pros come out, they're trying to come back in at levels that can generally be better as long as the market stays within the band and within the trend. Two parts to it. When I look at the momentum, it is up. So here's what I have. I have a market with upside momentum. I'm at new all-time highs. The trend is up basis the swing line. The bias is up, and we're approaching the first resistance level of 30.72. We haven't hit an upper Bollinger Band in a while. The NASDAQ hit it this week, and the trend is up. Higher lows, higher highs, staying over the 18-week average. Momentum up, bias up. I think there's some profit taking place against that. As we come to the Dow, this was a son of a gun trade yesterday. This was the hardest market that I saw because it looked like it was failing and it made it all back. This was a powerful, powerful day today, and so powerful that for the week you now put the market up 356 points. You were down 200 and something yesterday. It rebounded dramatically today. That keeps the pattern of higher lows, higher highs in place on the weekly chart. 27,639 is the next resistance point, and that'll go up a little bit over the weekend. When it reopens on Sunday night, the calculation should kick that up a little bit. If we come to the Russell, we got up and finished at 1590.20. Now, if we come back here, you can see the most recent settlement was 1580.80, and the high there was 1595 right behind me, 95.20, and you can see what you just did. So you settled over that number, and now the question is, where do you go? These are not all-time highs. You have higher highs in this market. The Russell has been one of the weaker, longer-term indices. Why? Small caps, different world events. Market still has momentum up, bias up. On pullbacks, I'd look for support into these two numbers, 1564 to 37, resistance 1609. When you come to the VIX, you are riding on the weekly chart, the lower Bollinger Band. That's very bearish for a market. When a market goes to a Bollinger Band and just sits on it, and you have momentum still pointing down, it's a very bearish situation. The longer this stays bearish, that's that insurance index, the higher you're going in the other areas, and that seems to be just what's going on there. When I come over to the 10-year note, you have a pattern with an outside weak to the upside where you've got higher lows, you've had higher highs. The weakness in this market would be taking out this week's low. If you take that out, you could put into play the lower Bollinger Band. Be a bit cautious about that because it's an outside week up. Now, if the market's really strong and the economy's good, do you think you're going to keep lower rates becomes the question you have to deal with, because the Fed appears that they want to back out of the market according to what they said at Wednesday's FOMC meeting. When you come to TLT, you've got a pattern of lower highs. You've had lower lows. This week's low was 136.99. It did not take out this low, but you already had a lower low. Got it? You had your lower lows from here, then the lower high. Now you're getting a reversal where the market's trying to go back to the upside. Battleground is right here, the 18-week average. Going home, the bias is up, but the trend is down and momentum has gone flat. Got to wait and see what that wants to do. In the dollar index, the dollar index has a pattern of lower highs, lower lows. The 18-week average is the resistance on rallies that I'm seeing, 97, 73 and a half. You wouldn't want to see prices get over that upper number here. The Bollinger Band's in front of it, and I think the pros are trying to push this market still on the downside since the trend is down. The bias is down as you closed under the 18-week average, and you can see the momentum is still down. Remember, momentum on weekly charts. I don't look at overbought, oversold. I'm simply looking the direction they're pointing. Eurocurrency, the flip-flop of the dollar. You've got higher lows, higher highs. You've had a 3-week battle against this 18-week average. The question is, the market's been holding it. You finished off, well, you're not quite finished right now, but you're over this 18-week average by about 50 points at this point of the day. Momentum up, bias up, trend up. Wherever this upper Bollinger Band comes in could be where the resistance point or an objective to the upside comes in. What turns the market? Well, you'd have to take out this low way back here. And I'm talking that number is 109.38.5 to break the current pattern of higher lows, higher highs. You can stall the trend by closing back under the 18-week average, but right now, as I said, the bulls have control, and if this week's high is taken out next week, the swing line could easily move to the lows of this week. In the peso, the problem here, as we all know, is that the House of Representatives is all consumed by the impeachment. And while they keep saying, well, we're still getting other work done, they're not. They're really not. It's all what's going on with the impeachment proceedings. When asked about the question this week about the new USMCA deal, well, they point to the Senate with other bills that are there. They don't answer the question, at least the people I saw. Is this going to get done? They don't want to give the president anything to win on. That is the problem that we've got. Is it a good deal? Well, you hear people pro and con. Do I think it would pass if it was brought up? Probably, but getting Ms. Pelosi to release it's the problem. You still have, though, the pattern of higher lows, higher highs. Now, the market did have an outside week down. If this week's high is taken out, that puts into play the odds, at least the way that I teach charting, that the market has a strong probability of trying to make a run to the upper Bollinger Band since it's already over the key moving averages. It's not a buy recommendation, just telling you what I see in the market there. Support between the 100-day average and the 18. I don't see anything on this chart that's breaking the trend, as you have higher lows, higher highs, and you'd have to break that low in order to take out the current pattern of that. In the Canadian dollar, well, here's a little different story. This market, first off, down 50 points on the week, finishing off at 76.08. If you look at the 18-week average, it's just above that. It got capped by the 100-week average of resistance. Now, moving averages that are above markets are often resistance points, under them support points. So I see a market caught right here. Makes a bit of sense. You know, you just had the election. Mr. Trudeau won. He's got a minority government. Now the question is, what can he get done? And that you've got the question of USMCA. So I can see the pause. Are we trending? No. Lower low, higher high, and basically back to that 18-week average and captured in between the 100-week and the 18-week. In the Japanese yen, the market finished off what I see as a break. That does not mean it can't go lower. Here's what it means. Up until this week, you had a pretty clear pattern, or did you? No. What you had was a mess on the charts. If we come to this week, you had a big reversal to the upside. You then take out that low. That throws the swing lines crazy. They don't know where they're at. I created the study, so I know what I'm saying on that. A break like that often, not always, leads to a challenge of the closest of a key moving average or the Bollinger Band. The market went down, as you can see, for that, just missed it. 91.74 was this week's low, 91.65 is that, but then you had a reversal up. So it tried, it didn't make it. You had two layers of support, the Bollinger Band 100-week average, and by having the outside week up, you broke the trend. So now I have a lower low and a higher high. I have no idea what the trend is in that market. Momentum is still down, bias down, but you've lost your way, and you lost it back here on what the trend was. In Bitcoin, you finished off a downtrend as you hit these Bollinger Bands, kept probing them, and came right back to that 18-week average. I call that the line in the sand. That's the resistance. The pattern is one of a higher high, lower low, momentum trying to turn up. The end of the day, the market's still underneath, well underneath the 18-week average. I'm not seeing a trend of any type. I'm seeing a market that ended a downswing. It has not confirmed it's ready to go to an upswing. In the Brent versus WTI crude, you're still staying under the red line, this 18-week average, which puts the differential between them into a narrowing pattern. If it was going up, you see the differences here. That's how much Brent would be over WTI. So that's all that's telling me. When I come to the Brent on a weekly chart, I have a pattern of a lower low and a very clear higher high. The market was stopped at the 100-day average in green, 100-week average, and the upper Bollinger Band, and it's stalled here at that 18-week average, and it's been here 2 weeks in a row. Market's trying to figure out what does it do. As strong as today was, with the market up on the dailies about nearly $2 a barrel, you're still 43 cents lower on the week. And when you come to the WTI, you can see the battleground here. The difference is this market's got a lower low, higher high in the Brent. The WTI has a pattern of higher lows and a higher high. The settlement at 56.16 or thereabouts is going to be over the 18-week. This chart's still looking bullish, and even momentum's joining in. If the market wants to rally and go further, I see the 59.24 to 60.97 level as the resistance, and the line in the sand is right here. But the trend is up unless you take out and go back to that 52.39 area. In gasoline, you've rallied up to the resistance at the 18-week average. So the swing line is up with the pattern of higher lows, higher highs. However, the settlement is still under that 169.91 level. You finished 4 cents under it, down into the lower part right here. Don't know what we've got. The bias down, momentum sort of flat, swing line up. In the heating oil market, the market has been playing now for weeks. I want to go into that, not just a week or two, weeks at this 18-week average. Typically, we start thinking cold weather at this time of the year, and you're looking for pops in the market. It didn't give it to you this week. It was down nearly 5 cents, finishing the week out under this 198.10 in the 193 zone, but you're not in a trend. You have a higher high, lower low, momentum flat, just sort of drifting here against what you're going on. So you've got to wait and see what happens. As you can see, these are the final parts of the day coming in. If it's like this in the metals, might get a little bit of a pop come the week. You know, one of the ways I keep up with the market, and I put it on my desk over there, is this is my phone. And I'm able to keep up with the markets by looking during the day as I'm walking around, what's the market doing? But this is included with the subscriptions to my research. Otherwise, it's $40 a month, and then you can decide you want live quotes, delayed quotes, how you go. Each morning at 7 a.m., I have a cup of coffee, I hope you have one, because I've already published by that time, my morning review for my subscribers. Being on YouTube is not a subscriber to me. I appreciate that you watch that, but my subscribers have to either see this on one of my devices or our website. And on it, I'm going to cover 40 charts typically every morning on just futures, and then 3 to 5 on ETFs, and they're going to be in this exact sequence. And I'm free to reign there. What do I mean by that? First of all, the charts I'm using have more studies than the ones you get on YouTube. Number two, I'm allowed because it's a subscriber video, not one where you need a user ID and password. It's not for the general public, and away you go. I can say buy here, sell there. Yeah, I'm going to be wrong. I'm going to be right. I'm going to throw out trades. And for those of you that think that the only trades I do sometimes are just these in and out, not true. Take a look at the S&P that I've got my clients in. It's just not true. And you can take a look at this, and I'm going to cover each one of these in detail. So let's assume you're charting and you're going, gee, what do I think of that? What does Ira think of it? And I'm coming out there, all the holds on me are let loose. I can say what I want in that morning video. The video is typically 20 minutes long, but since I do it in this way, every time there's a slide bar you pull on our website, it's going to say stock indices or currencies, tells you where you're at. There's a lexicon on the side, just click the name, it'll take you there. You can watch the whole thing. The cost, come on, this is a joke. $7.95 for the first 30 days. If you like it, it's either $15 for the next 30 days, or you can buy a 1-year prepaid subscription for $156. Now, one full point in the S&P is $50. We're talking $7.95. A tick in gold is $10, right? $7.95. So if you're serious about the markets and you're looking and you like what I do and you're coming back all the time, why not support this to begin with and then help us help you take a look at what we've got there. Go to our website, www.iraepstein.com. click on the word research. You're going to see morning subscriber video and my other parts of my research. You'll see it right there. You sign up right on the website. We get you set, and we will send you out the links you need to download and have, be it on your Android phone or your iPhone. You're going to have this application we have. When I put out a video, it's a push application. Why should you pay a text message? Hit it. It'll come in. Just hit it. The videos are going to play. So you've got them as I put them out. If you have my full research, it works the same way. Click here. If you're watching me on YouTube, it'll take you there. Otherwise, go to the website. I'm Ira. You have a great weekend, and I'll see you all come Monday.